Is the worst of the trade war behind us? Yes or no? If you're talking about sentiment where the stock market is concerned, where the bond markets are concerned, yes, perhaps the worst is over because on the 2nd of April, the US administration came in with tariffs at this level. Now we have a 90-day reprieve and we have governments actively negotiating with the US to bring the tariffs down. But if you're talking about the impact of the trade war in terms of the economy, then certainly we have not even seen the start of that actually happening. Don't forget that at the start of this year, we basically had a 2.5% effective tariff rate where the US economy is concerned. Even now, with the reprieve of the 90-day period in, we basically have the effective tariff rate going up to about 15%. And in fact, where the US is concerned, a lot of the manufacturers are basically telling us that the impact will only be gradually felt in the second half of this year, moving into 2026. If that's the case, what should we then do with our asset allocation? We've mentioned many times before that you need to reduce your US dollar exposure. The reason for that is clear. The US economy will slow down, inflation will trend upwards, which basically means that your real returns will be affected. So you need to reduce your US dollar exposure and perhaps actually diversify that exposure into various currencies, like for example the Swiss franc, the Aussie dollar, the euro, and perhaps the Sing dollar as well. What about your other assets? We do think that if you have a lot of exposure to the US equities market, again, you need to actually rebalance that and be diversified across all asset classes. We do think that private investments are attractive. We do think that some of the macro hedge funds are actually very attractive as well. Diversification is key because one thing that we know for sure is going to happen is that volatility will continue to remain high where the markets are concerned.